Welcome to this week's Energy Market Wrap. We'll start with a major policy shift in Washington, where the Trump administration ordered federal agencies to withdraw from 66 international climate and clean energy organizations, including the United Nations Climate Framework. The move reduces U.S. participation in multilateral forums and standard setting, even as project economics continue to drive deployments at home. Now on to developments in the upstream sector over the past week. First, a leadership change that matters for U.S. natural gas. Ascent Resources announced that founding chief executive Jeffrey Fisher will retire at the end of January, and Brooks Shugart will become chief executive officer while continuing as finance chief until a replacement is named. The timing, weeks after a multi-billion-dollar takeover offer, keeps strategic options in focus. Moving north to Canada, Kelt Exploration rolled out its 2026 plan, lifting capital spending to support more drilling and completions in the Montney and a step-up in volumes. It's a straightforward production growth story with balance sheet discipline. And in Brazil's pre-salt, Petrobras brought the Búzios 6 system online, adding a new floating production unit and pushing total Búzios capacity to around 1.15 million barrels per day. The project also enables more gas deliveries to shore via Rota 3, tightening integration between offshore production and onshore supply. Moving on to the midstream and downstream sectors, Energy Transfer raised 2026 growth capital to between $5 and $5.5 billion, pointing to higher adjusted earnings as natural gas expansions ramp. The emphasis is squarely on enhancing the gas network and serving new load pockets. Keeping with gas movement, intensity infrastructure, and Rainbow Energy greenlit, Phase 1 of a 1.1 billion cubic feet per day pipeline in North Dakota. The 36-inch, 136-mile line is designed to integrate Bakken and Canadian supply with regional power demand, targeting early 2029 service. Off Mauritania and Senegal, BP and Cosmos reported that Greater Tortue Ahmeyim reached nameplate capacity on the floating liquefied natural gas facility. First cargoes are behind them, and volumes are now scaling, an important milestone for West African gas. The oilfield services sector also saw some notable developments in the last week. In the Gulf of Mexico, BP awarded TechnipFMC the integrated subsea systems and installation package for the Tiber development. This is a 20,000-pound per square inch Paleogene project tied to an 80,000 barrel per day floating production unit, another strong signal that deepwater remains a reliable source of long-dated barrels. On the utility side, American Electric Power is moving ahead with a substantial portion of a 900 megawatt option for Bloom Energy solid oxide fuel cells near Cheyenne, Wyoming. A 20-year offtake agreement underpins the project, firm, fast-to-deploy capacity that helps bridge the gap while longer lead grid investments catch up. Finally, Pattern Energy agreed to acquire Cordelio Power in an all-stock transaction. The deal folds in roughly 1.5 gigawatts of operating and in construction wind, solar, and storage across Canada and the United States, plus development pipeline and talent, positioning Pattern for scale with marquee transmission and wind projects already in flight. That concludes this week's Energy Market Wrap. Thank you for listening. Keep your finger on the pulse of the energy industry with Enverus Publications. Our experienced writers cut through the noise and deliver insights that help you stay ahead of the curve. To learn more, reach out to business development at Enverus.com or visit www.enverus.com.